You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
It didn't come through loud enough. I was going to try something, but it didn't work out. Hold on. Let me start again. Okay.
Ladies and gentlemen, now a behind-the-scenes look at talking real money.
Be quiet. Don't mess up. Don't mess up my big exciting intro.
Go.
Ho, 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 ho. Hello, everyone. Don and Tom weren't able to make it today, so I'll be standing in for them. If there's anything you want, forget about it. I will be quarantined. Ho, 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 ho.
Well, gee, thanks, Santa. Can I give the number when people still call us? Is that okay?
I just kicked him out. What do I think he was doing in here anyway? Come on.
By the way, Santa's doing everything by Amazon Prime. He doesn't need to go anywhere.
Exactly. He
Whatever.
invented Amazon
Click.
Prime.
Probably true.
It was all Santa's
Saves all
invention.
those wear and tear. Yeah.
Hello, everyone. Welcome to I know I don't sound a thing like Santa. Hello, everyone, and
Sound a lot like
welcome to Talking Real Money. This is the holiday season show, the pre-Christmas.
Yeah. Somebody had the nerve to write me today and say, "Are you doing the show today?" I'm like,
Well, yeah, we do.
Where would we go?
We did. We actually talked about that last
Things
week.
you will
we
not
said,
see.
we
The
said,
places
so
you will not be.
on the 26th, should we do a show? And we both kind of looked at each other and went, "Where else are we going to be?
Yeah.
We got anything else to do? No plans. Going on vacation? No. Going to go visit family? No. Heck, if you're in England, Christmas was canceled. I heard Boris.
I am cooking, however, an 11-pound prime rib. I don't care. If I have to eat it all myself, well, then that's the way it goes.
Because I still have oil in the fryer, I'm cooking me an 11-pound turkey again. I'm doing another one. It's just...
Don't tell me that's been sitting there since Thanksgiving.
The oil lasts. I kept it in the fridge.
Oh, okay. All right. I wouldn't leave it in my garage or something.
No. Hello, everyone. Let's do this again. Welcome to Talking Real Money. Got a question about money? Give us a call at 855-935-TALK. 855-935-8255. I have bells. I can play with them all day.
I got a bad feeling about the bells. The bells of dawn.
Oh, wait.
Oh, well.
Let's try these bells.
Those are better, by the way, because I want to talk about stocks, and that sounds a little more upbeat than the other ones, a little more excitement, because stocks are exciting and sexy and make you a lot of money, especially if it's your favorite stock, Tesla, right?
Oh, wait. Hold on. If we're going to do Tesla...
Oh, we got a driving one? Driving stock sound?
I got to do something like this.
You know what happened yesterday with Tesla?
No, what happened?
That's too slow.
Well,
first of all...
No.
In the last... No, it's not going to work. Last 10 minutes of trading...
It's more like the bell on Wall Street.
1.7 billion shares traded yesterday. Valued at $150 billion with a B dollars, pushing the price up because everybody had to buy it, right? Because it's going to be in the S&P 500 come Monday.
Yeah.
And another reason to buy a more diversified portfolio, if you ask me. But the stock closed 695 yesterday. That is a closing record.
Okay.
695.
Let's just...
I can see you're winding up to wind down or something.
I mean, I was just on the road just a few minutes ago. And I did see a Tesla. I also saw about 20 Nissans, 20 Toyotas, several General Motors cars, a couple of Hyundais. I saw a lot more of other brands than I saw Teslas. How is Tesla worth this much money? There's something wrong here.
Yeah, by the way, when it comes into the S&P 500 next week, you know what? It'll be the sixth most valuable company in the index. Out of, I believe, 500. Number six. If you can find Santa, I think he's behind you there. The Gold Wing Tesla, if you could put that in the spot there.
What did Tom say?
The gold wing Tesla, sir, would be very nice.
Excuse me.
And used is okay, because I drive used cars.
Yes, little Tommy. What was it? Go ahead.
I appreciate you calling me little for
Come
one
on,
thing.
little
Thank
Tommy.
you,
Sit on Santa's lap.
Well, let's not get carried away.
What can Santa
but I tell
bring
you what,
you for Christmas, little Tommy?
The gold wing Tesla. And used is okay. I'm not
Tesla.
that picky.
Oh,
yeah. Right there in front of my house.
We have a little tiny 6-inch gold wing Tesla that will be under the tree this year.
Oh, thank you, Santa. Really appreciate it. And now I'll be owning the stock too, because that's an interesting question. How much of it we own? Because of course our portfolios are not following indexes per se.
Well, they have every stock on the planet, so
minus a few.
Yeah,
they might have been careful about buying this.
Really?
Because it's up 731% this year.
Well, but wouldn't you want to own that? I don't know.
No, I don't want to be in a stock that goes up 700% because Rob Arnott says this is a bubble and it's going to pop.
What does anybody know?
Exactly.
Nobody knows the future. That's the problem.
Nobody knows nothing.
In fact, everybody's trying to convince you of something somewhere. We're going to talk a little bit about that. We're also going to talk a lot fit with you at 855-935-TALK. If you'd like to call and speak with Santa, you're welcome to do that too. 855-935-8255.
Tom and Don are talking real money.
You know there are a few things more important than planning for retirement, but it does seem complex and convoluted. That's why Tom and I created Retire Meet back in 2015. This year, thanks to COVID, Retire Meet is going both virtual and national. And since you'll be doing your own catering, it's absolutely free. All we ask is that you sign up in advance at retiremeet.com so we can make sure we have enough capacity for everyone. This year's lineup will be our best ever, featuring experts on retirement investing, income generation, Social Security, long-term care, senior housing, estate planning, and more. Of course, Tom and I will be hosting. The consumer man Herb Weisbaum will be there, and we'll be presenting a huge double keynote address featuring both Paul Merriman and Dimensional Funds founder David Booth. Since you can sleep in and even attend in your pajamas, there's no reason to miss Retire Meet America 2021, so reserve your free tickets now at retiremeet.com. That's retiremeet.com.
For your real life and real future, Tom and Don are talking real money.
How many Tesla shares does your mutual fund company own? That's a question we pondered during the break, and we found out Dimensional Funds doesn't own very many. Let's see. I'll get you the number of shares.
Dimensional Funds is a fund family based in Austin, Texas. We use many of their mutual funds, and they are designed, you could say passively, but they're not pure indexes. I put it that way.
They have 737,000 or had 737,000 shares of Tesla. Whereas Vanguard, get this, has over 43 million shares of Tesla.
And what percentage of that is of the stock is it?
Well, I was looking at this number. That's not correct. I'm not sure.
Oh, okay.
Here. So it's 43.
Right. But that's still an awful lot of shares.
An awful lot.
And
Capital World Investors, though.
Yeah. Capital World Investors?
Over 52 million shares. Now, do you know who they are?
I don't know that name, no.
It's the American funds.
Oh, yes, I've heard of them.
Yes, it's just their parent company. And that just tells you how S&P 500 heavy the American funds tend to be.
So we own Tesla, but we have it's like all the other stocks we own. Very little bit of it are in our portfolio. If you just own the S&P 500, I bet you're going to have, 6-7% of your money in that one stock.
Yep.
A lot. So that's a problem.
Yep. It's really dangerous. And by the way, this brings up another point. When people use the term the market, I hate the Dow as an indicator of the market a lot. I mean, I hate it a lot. But I also dislike the S&P 500 as the way we see the market, what we ascribe the market to be. It's not. The market is much bigger than the S&P 500. It has a lot more stocks in it, and stocks that tend to do better or have in the past.
And in the S&P 500, you hold 500 U.S. companies.
Right.
Today, when you add in Tesla, I bet the top 5 or 6 now make up over 20% of the money you're in, and you're not exposed much to small.
You're not exposed
value
any in the 500.
not small at all, but some value. But
no international?
But mostly. Correct. So a lot of things you should own, you do not. That is a problem.
Yeah, it's not good for you. It's not good for your long-term diversification. 855-935-TALK is our number, 855-935-8255. And let's get started with the questions. And Bill is up first. Hi, Bill. Welcome to the program.
Happy holidays.
Thanks for taking my call. My son's been bugging me to add gold to our portfolio. We've done fairly well over the years. Probably started 45 years ago on building our portfolio. We don't have any gold or silver or anything like that. We do have stocks and mutual funds that were set up by our broker and everything, and we've been doing very well with it. So I just wanted to know, is there a reason to think about getting gold?
No. None whatsoever.
Unless you're going to put it on the
your
tree.
Son is wrong. Your son is wrong. Your son is caught up in the the popular press that talks about gold and Bitcoin as being the future. No, gold has never made anybody long-term money ever in the history of gold, unless you mined it.
He's caught up in the same thing that caught I think his great-great-great-grandfather in the gold rush in California.
No, that was even different. He was going to mine the darn stuff.
He did.
In this case, though.
Disappeared.
In this case, it's owning gold. An ounce of gold, you buy it today, you set it in the corner, you come back 40 years from now, and it's exactly the same size as it was 40 years ago. You buy put that same amount of money in a really good business that grows over 40 years, and you can actually see the company is bigger.
And by the way, if you hold a diversified portfolio, you hold companies that mine gold. You hold companies that sell gold. So you have exposure to it as an industry, but not as a metal.
Yeah, I think your son's wrong. I know he's wrong.
Is that helpful? Well, don't tell him that at Christmas either, by the way. But
pardon me?
So I was arguing with him, and he's hell-bent on buying. In fact, he shipped gold here to the house because he didn't want to ship to his place because it wasn't secure enough. So it was nice when he opened it.
What's the address?
What's the address?
Where are you located? I'll be by. I got my crew. We'll come by. We'll fix it.
Oh, Lordy.
Well, I mean, if you're going to ship me gold, I'm not going to argue with you, right? I'm okay with that. My son called me and said, send you gold.
He's betting on gold. You see, it's very, very different. He's gambling. He's actually making a bet. And, yes, people have made money betting on gold. They have, if they get in at the right time and get out at the right time. But back in 1980, for example, gold was one of the hottest things in the world. People were buying it like mad, and those who bought in 1980 didn't recover until the 2000s. Actually, the 2000s.
It was 2000s.
Yeah, 2000s, early 2000s.
Yeah, gold has a very interesting look at return. So there are periods of time, as Don said, if you bought and sold in that particular time, sure, you did well. Over the long haul, not so much.
When he bought it, I believe with his premium and everything, he was pretty close to $2,000 an ounce. I'm not sure what it is now because I haven't been looking, but
now I'm curious to see what gold is worth.
By the way, ask him to call us in 10 years and tell us what the price is.
Gold is worth $1,886 an ounce. Right. So he's already taken a pretty substantial beating.
Gold bath.
It sounds like something from a James Bond movie.
Gold finger.
Going to bathe you in gold, Mr.
Bond. And I don't see any reason you need it. I mean, it's either sold on fear because everything's coming apart and I got to have gold, or it's sold on all that glitters. You got to own it because it's gone up recently, and it did have a good run this year, and that would not be a reason to go out and buy it. No.
Oh, as a matter of fact, I'm totally wrong. I'm totally wrong.
Reasoning. He was afraid that the stock market was going to go down the toilet, and that if you had gold,
that's why you hold bonds.
Grocery store and buy groceries, So.
Let me correct my statement. Actually, when you adjust the price of gold for inflation, gold sold for $2,200 an ounce in February 1980.
There you go.
Gold has not yet gotten back to that number adjusted for inflation.
And if it's about
a terrible investment.
The doomsday thing, taking it in and cashing it in to buy things, there's better ways to deal with doomsday scenarios.
Guns.
That would not be I would do.
Ammunition. Costco, freeze-dried food.
Yeah, or canned goods, one or the other.
Yeah, freeze-dried food will probably last longer.
I think Costco has a thing for like $1,000, enough food.
It's a year's worth of food or something
like that. I would run off and buy that, put it in my basement, and keep your gold. But if he sent it to you, sure, that's very kind. And by the way, I'll be glad to give my address out later on the show.
There. See my finger right there? That is every bit of gold I own in the world.
Gold, too.
That's it. That's all we got. 855-935-TALK, 855-935-8255. We want to help you manage money better, make better financial decisions. Follow the science, not the emotion of this whole process of making money for your future.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Santa, back! Go back! Santa.
He's early.
He's really anxious to get on the show.
Yeah.
855.
Get your own show.
Yeah. If somebody calls for you, I'll let you on. 855-935-TALK is the number, 855-935-8255. And up next is Jerry. Jerry, welcome to Talking Real Money.
Hello, Jerry.
Thank you very much. I appreciate it being able to talk to you. I've been listening to Bob on and off for decades. I think something called Starship Enterprise way back when.
Oh, that was Bob Brinker. That wasn't me. Yeah.
No, well, I know you in your voice. Maybe it wasn't that, but it was about.
Yeah, Bob Brinker. Bob Brinker and I go way back. We do.
I thought you're sentencing Don to some sort of spaceship or something.
No, you remember what he would say? It was something about.
I do. Brinker. That was like a sign off or something.
The Talk Ship Enterprise or some silly thing. I don't know. Yeah. Brinker's not on, but I outlived Brinker on the radio. I outlasted him.
Well done.
Yeah, well, so I have a question.
Thanks, Bob.
I've just recently inherited an IRA from my wife who died this year. I'm going to convert it into a Roth, and so that it'll last longer than me, and therefore want to get something going primarily in the international area because it's a fairly small amount, $60,000, but it's got a base of Apple stock that she bought at $12 a share, and also one really good mutual fund, Mayors and Powers Growth Fund. But I want to get an international fund. I've been researching them, and I've got a list out of Forbes that recommends the best international. And I'm just wondering, how diversified should an international fund really be? You know, I've got things from Fidelity at 900 shares, stocks in portfolio, others that have as many as 7,000 stocks in the portfolio. That's the Vanguard Total International Stock. What's your recommendation?
And I'm going to stop you right there because that would be the fund we would recommend. The Vanguard. By the way, Fidelity has a very fine,
has a good one
totally
too.
International. Schwab does too. The other funds you're referring to are actively managed, where a manager has decided which stock should be in and which should be out. We know of no such manager who can see the future well enough to pick which stocks to put in that portfolio. So, and the Vanguard International Fund has very low expenses. It is very widely diversified, and it includes some emerging markets, which have been a very important part of the world to invest in as well. So that would be my option. But again, if you go to talkingrealmoney.com, we have a list of the other index funds, international index funds that we recommend at Fidelity and at Schwab.
I agree with everything he just said. The more diversification is better than less. Owning the entire market is better than owning a hand-picked portfolio by someone who can only claim decent past performance. Their past performance is truly not at all indicative of what the future will hold. Because most, and the research backs this up, most of the overperformance by active mutual fund managers is more likely attributable to luck than to skill.
Okay, well, I do want to ask about one of those managed funds. It's a no-load that I came across while I was researching this international stuff. It's only got 37 stocks in it, but its time frame is decades, not quarters.
Who is it?
Bailey Gifford, BGLKX. Bailey Gifford, long LKX.
That sounds like one.
37
sounds like
securities.
One you found in Forbes.
Yeah,
which used to be one of my favorite publications and has become one of my least favorite publications. A couple of things. One, you can get the Vanguard or the Fidelity for an expense ratio of about 0.1% or less. This one has a 0.75% expense ratio.
Jerry, want to also pass along our condolences for the loss of your wife and hope you find peace during this holiday season as well.
Thanks for the call. I wouldn't own it. 855-935-TALK is our number, 855-935-8255.
Tom and Don are talking real money.
Now everyone can meet the retirement of their dreams at Retire Meet America 2021 online. Sign up now for free at retiremeet.com. That's retiremeet.com.
Reality radio for a really great future. We're talking real money.
Once again, you have a question, call us at 855-935-TALK, 855-935-8255. One of the big advantages of having a nice long break, which you don't hear on the podcast, only people who listen to the show actually hear it, is the opportunity I get to go in and do a little bit more research on funds that people call and talk about, or on issues people call and talk about. And so I went and did a lot more digging on this Bailey Gifford long-term global growth fund that the previous caller was talking about.
Which is a mutual fund that holds global stocks. It's not international.
No,
Careful to make
no.
the differentiation,
US
because
and
international would strictly hold stocks that are not, traded in the U.S. So this is a global fund it's designed to hold stocks in the U.S. and internationally.
It does not have a long track record. It only goes back a few years. They have a 3-year trackable history. They have 37 funds in the portfolio.
37 stocks.
37 stocks. And the number one holding in this portfolio is something we just talked about. Tesla.
Yeah, because it's up 700% year to date.
8 1/3% of the portfolio is in Tesla. Then 8% is in Amazon. 6% is in Alibaba. 5% is in Tencent. And they have all these other international, these hot stocks. Now, they've picked hot stocks. I will grant them that. I absolutely grant them that. The proof is in the pudding. They have picked hot stocks. Year to date, this mutual fund is up 102%.
Which is pretty tough to beat, actually.
Yeah. But that is largely a huge chunk of that. Probably about 40% of that is directly attributable to their luck with one stock. Come on.
That would be the automaker Tesla.
That was pure, unadulterated luck. That's not smart, unless you have inside information, which you can't with Tesla, because Elon Musk shares it all the time. So it's hard to know. But anyway, that's a big part of it. The other things that we need you to bear in mind. One, multiple academic pieces, academic research studies have shown that the vast majority of outperformance of actively managed mutual funds is attributable to luck. Only about 1% of actively managed mutual funds outperformance can be possibly attributed to skill. 1%. The problem is the best funds rarely repeat. So this fund doesn't have a lot of history. In 2018, it was down 1%. 2019, it had a good year, it was up 33. But really what made their performance over the 3-year period is the 102% this year. And the other thing is risk. And we talk about this a lot, but we need to keep quantifying it. We try to quantify it using a term called standard deviation, which is volatility.
Yeah. How much things move up and how much things move down.
The bigger that number, the more scary the portfolio is going to be for people in down times, because it moves a lot. And their standard deviation, a balanced fund is maybe a 9 or a 10.
Somewhere around there.
This is a 24.
So there's a lot of bouncing.
A lot of bouncing. Plus their fees are
By the
high.
way, what does it charge? What do they charge?
0.76% per year. Not the worst I've seen, but
not outrageous,
not great either. So
let's go back. Yes, we think you should hold international stocks. Mm-hmm. Yes, we think you should be widely diversified, like thousands, 7,000, 8,000 stocks. And we think you should keep your fees extremely low, and we don't think you should have any stock that makes up 10% of a portfolio ever. That is a huge bet.
And you may miss out on the big bangs for your buck. You might miss out on those. That's a risk you take. But bear in mind that in previous years, the hottest funds have, and again, this is based on tons of research, have been the funds that have done worse in subsequent years.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Well, we've got lines open because we had people hang up during the break. 855-935-TALK is our phone number. 855-935-8255. During that break, I was doing some research on the best mutual funds in 2010 just to see how they'd done recently. And here's another issue that we forget to mention. The funds that are the best in a given period, generally the bulk of them become the worst over that next similar period. Or what do?
They go out of they get folded into another one, or they go out of business.
Or they go out of business. I just was looking at a list from, I don't know, some site, the best performing diversified mutual funds. And so far I've gone through 4 funds that have shown impressive performance in the years prior to 2010, and all 4 of them don't exist anymore.
Yeah, I mean, because oftentimes you make a big bet on something that pays off for a short period of time. And by the way, the mutual fund industry is littered with not just that. I guarantee you, this fund you just mentioned that we talked to Jerry about, there will be millions of dollars, billions maybe, that rush into this fund.
Into it, yeah.
Oh, this always happens. Then guess what happens after that?
They can't invest it all.
That, and it will generally underperform if the track record is to be believed. And then you will take your money out and look for the next best performer. It happens.
I just finished going through this list. The Burla Sun Life Frontline Equity Fund. This is a winner. It said.
Oh, I'm heavily in that one.
Doesn't exist. The HDFC Equity Fund doesn't exist. Reliance RSF Equity doesn't exist. Wait a minute. Did I check this one or did I skip this one? Let me put this one in and see. UTI Opportunities doesn't exist. Not a fund on this list still exists.
And it has been a whole whopping 10 years.
10 years.
Yeah, it's a long time.
Well, and every one of these says
lots happened.
These have been great funds for long-term investors. Have been.
How long?
Been.
How long is what I'd say.
How do you know what to do? This is the question everybody has. Mm-hmm. This is why we get these calls. Don, where do I put the money? Well, I read in Forbes. Well, I read in Money. Well, my broker told me. Well, my brother's uncle's cousin
guy
who's
in the
on Wall
next
Street
to me.
told me.
When you used to have cubicles next to you.
Yeah, now you just, like me, I just have a bathroom next to me and a bedroom over there.
You're in your own
because I'm in a closet. Cubicle. It's not even a cubicle. It's just
you have a guitar, though.
Box. I have a guitar, which I keep trying to learn to play, but then work gets in the way.
There's been a bit of that.
Oh, my goodness.
So back to what you were saying.
Yeah,
What do we do?
This is the problem. Yeah. I was reading an op-ed piece in one of the papers I read. I read 3 or 4 papers a morning. And the piece was about political trust, government trust, how trust is non-existent.
Not much of that going around. Yeah.
It also said in our society that there's just not much trust. People don't trust each other. And it occurred to me that we're in an industry that is probably as bad from a trust standpoint as the government. And that's
I think we're right there equal.
We're really
equal
close
to
on
Congress.
Yeah.
Congress and short-term loan people.
But what bothers me is that what we do, this is my belief, what we do is so important. It is almost as important as your doctor is to you. Because
let me stop you there. So you're either bucking for Archbishop or trying to get an early vaccine. Which is it?
Yeah, neither. I stay locked in here. I was locked in here
That's
before.
True.
I was locked in here before COVID. Where am I
That's
going?
A good point.
No, my point is that most people feel pretty confident they can trust their doctor. Pretty confident. I really
How about
believe
your CPA?
that. I think most people believe they can trust their CPA. I
lawyer?
think a lot of people believe they can trust their lawyer. Yes.
Yeah, not the other lawyer.
Yeah,
course,
but theirs.
Yours. Yeah.
But I think most people would be foolish to believe they can trust most of the investment advice providers out there, the financial advisors in air quotes, because that term means nothing. I don't think they're
anybody can call themselves that.
I don't think the bulk of this industry is trustworthy, and I think it's very, very sad because I do believe there are people you can trust. I just think they're really, really hard to find, and I think the industry has done this to itself by putting greed ahead of your need as an investor.
Is this your holiday card? This is rather negative for the season.
Greed trumps need. Ooh, I even got Trump
Gordon
in there.
Gecko?
I even got Trump in there for the first time in the show. I got Trump in there. Greed trumps need.
Yeah. I'm trying to figure out what's the takeaway?
The takeaway is what this industry needs to. Physician, heal thyself. Financial industry, heal yourself because you're a bunch of money grubbing jerks. Sorry,
but if you are listening and you want to put the odds in your favor,
right,
here are the things I think you should pay attention to.
Oh, you're going to go. Oh, you're going to go for the positive because you want sainthood. You're going to be like the positive guy, leaving me Mr. Negative. It's okay.
I'm somewhere many thousands of miles removed from anything close to a saint, but I will say this. Yeah, thank you, Santa. I appreciate it.
So
I hope I'm not on the naughty list.
You're trying to get the Gullwing Tesla, aren't you, by being the nice guy?
Yeah, I'll search carefully under the tree. Number one, here's what I think you can trust. I think you can trust, generally, the work of academics.
Generally, yes, I agree.
Yeah, because their job, they're trying to find,
except for those things who have their who are subsidized by insurance industry.
Yeah, I said generally. Number two, generally you can trust people who are IARs or work for a registered investment advisor. Generally,
I'm sorry.
Generally.
Okay, you throw out jargon. I throw out jargon, and you explain my jargon.
Okay.
What the heck is an IAR?
Investment advisor representative. Those are the people that work for a registered investment advisor. Yeah, let's make it more complicated, because they have a fiduciary responsibility to you. And here's the third thing I think you can generally trust, because it kind of gets back to where we started the show with the gold question. I think you can generally trust that capitalism, investment in stocks and bonds, will make you money over time. Generally. That's it.
Well, where do I rank, Tommy, on that trust scale?
Well, you're way off the trust scale, sir.
Everybody
and by the way,
trusts Santa.
I've got some really nice cookies for you this year if you're thinking about my gift. They're tasty, fresh, and made from home from scratch.
You can bribe me with cookies. Everybody else does.
Thank you. I'm going to run out there early on Christmas Day. I think those are the things you can trust. You're right. But the industry is not very trustworthy because the industry is built for the industry, not built for the consumer, generally. Sorry.
It is, and yet they run these wonderful ads, and they tell people how they're going to make you a brighter future. The way you could build people a brighter future is by, one, you stop pushing your salespeople to make sales at any cost. And the compensation.
You saw that note. Yeah, right. You're going to talk about that a little bit?
Well, the compensation structure of most of the investment industry is exactly the opposite of what it should be. You should pay your advisors, your information providers, really they should be paid more on a salary and less on commission. They should, if you want, pay them for the amount of money they manage or something. But this commission business is just awful. I mean, Merrill Lynch is eliminating pay, period, for anybody who manages any advisor who has clients with less than $250,000 under management. This is, I'm mad at the industry.
Tom and Don are talking real money.
Our biggest event of the year, Retire Meet America 2021, is now available to everyone in the country, and it's absolutely free. Sign up now at retiremeet.com, retiremeet.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Yes. Hello again, everyone. You know, once Christmas is over, I'm going to start thinking about my retirement. And because it's online and no one will know I'm there, I'll be pretending? Oh, Santa can't talk. I'll be attending Retire Meet 2021. It's an online retire meet, and it's absolutely free. So go and, like me, sign up at retiremeet.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Should keep the lawyers happy.